Hi Banpute. As we promised in the previous lesson, today also I came with Bank of Ceylon to present another lesson in the syllabus. Right. In previous lessons, we mainly gave our priority for the financial accounting syllabus. We have 16 lessons, lessons number 1 to 13 financial accounting. Lesson number 1 to 13 financial accounting. Then and there we discuss special lessons in the financial accounting. Now from this lesson onward, I am planning to move to the management accounting side. Before starting the lesson, I must thank to the Bank of Ceylon, the bankers to the nation, for giving this valuable chance me to go ahead with your education by providing this seminar series. Right. The management accounting. The management accounting unit number 14. Management accounting. The management accounting unit 14, we mainly focus 4 areas: the introduction, the material costing, labor costing, and overhead costing. The 15th lesson also is a management accounting lesson, which is a marginal costing. 16th lesson also management accounting part, investment decisions. Right. This 14th lesson mainly focuses 4 areas: the introduction to cost and management accounting, then material costing, labor costing, and the overhead costing. The costing, cost and management accounting introduction. Cost and management accounting introduction. Right. We go ahead with the questions. So question number 1. To go through it. To state the subdivisions in accounting together with their purpose. The accounting we divide into 2: financial accounting and management accounting. Accounting we divide into 2: financial accounting and management accounting. In the first lesson, unit number 1 also you learn these differences. The financial accounting purpose. The financial accounting purpose. The purpose of financial accounting is to provide information for the interested parties for decision making. The purpose of financial accounting is to provide information for the interested parties for decision making. The interested parties we call stakeholders. Then the purpose of financial accounting is to provide information for the interested parties who are interested on the business. We call stakeholders for decision making. Right. Then the management accounting. The purpose of management accounting is to provide information to whom? For the managers for what? Decision making. The purpose of management accounting is to provide information for the interested parties. Here managers. You specify the managers for decision making. For managers for decision making. But financial accounting you didn't specify. Financial accounting you didn't specify stakeholders, commonly any party. You provide information. The management accounting purpose is to provide information for the internal parties, so managers for decision making. Two subdivisions, financial and management accounting. Question number 2. To state in brief the difference between management accounting and financial accounting. To go through it. So you have different aspects given. Under them, you have to identify what are the differences between. The frequency of preparation. Frequency of preparation. If you take management accounting, no frequent reporting. The management accounting, no frequent reporting, or you prepare them on demand. On demand you prepare. There is no frequent reporting, but financial accounting you have frequent reporting. Frequent reporting. Frequently you report them. But management accounting, on demand, on request you prepare the management accounting record. The legal requirement. For management accounting, legal requirement not applicable. So not applicable. There are no legal requirement for management accounting. But financial accounting, legal requirement are applicable. Applicable. You have accounting standard in financial accounting. The time period covered. Period covered. The management accounting, no specific time period. No specific time period. The management accounting, no specific time period, but in the financial accounting you have a specific time period. If you prepare for a year, you prepare annual financial statement for a specific time period. But in the management accounting, maybe for a day, for an hour, for a week, 2 weeks, 2 months, 6 months, years, 5 years, 6 years, no specific time period. The parties used in information. Parties used in information. Management accounting, internal parties. The management accounting, internal parties, management. But financial accounting, both. Financial account information maybe by the management or external outsiders. The all parties used in financial accounting, management accounting, you only managers or internal parties. Right. The nature of information. The nature of information management, you use historical information and forecast or budgeted information. Nature of information, management accounting, you use historical and forecasted information. Historical means past information, forecasted future information. But financial accounting, you use only historical information. Historical or past information. Historical or past information. Statement of profit or loss for the year ended. Statement of profit or loss for the year ended. Financial accounting. Right. Structure. The structure. The structure, you have specific division. A specific division. But financial accounting, you prepare for the overall organization. overall organization. Management accounting, you target one specific area, one specific division. But financial accounting, we target overall organization. Take as an example Bank of Ceylon. The branch level, they prepare their financial statement. Nugegota branch financial statement, Dehiwala branch, Kandy branch, Anuradhapura branch, Gold branch, Matra branch, they prepare in management accounting. But financial accounting, overall they target Bank of Ceylon as a one entity. The generally accepted accounting principle. The management accounting, you don't have generally accepted accounting principle, not applicable. Not applicable, but financial accounting we use generally accepted accounting principle. The financial accounting applicable. The generally accepted principle not applicable in management accounting, but in financial accounting we use generally accepted accounting principle. The time focus. The management accounting, always you focus on the future. You focus on the future. The based on present information, past and present information, you focus on future. Management accounting. But in the financial accounting, past for the year ended. Statement of profit or loss for the year ended. Statement of financial position, asset. Changes in equity for the year ended. Statement of cash flows for the year ended. Time focus, future and past. Future and past. Again, frequency of preparation, management accounting on demand, financial accounting frequent reporting. Legal requirement, not applicable, applicable. Period covered, there is no specific time period for management accounting, but financial accounting you have specific time period. The parties used in information, management accounting internal parties, financial accounting both internal and external parties. The nature of information, management accounting past and forecast, historical and budgeted. Financial accounting past historical information. The structure, management accounting specific division, financial accounting overall organization. Generally accepted accounting principle, management accounting not applicable. You don't have accepted principles, but financial accounting you have generally accepted accounting principle. Time focus, management accounting, you focus on your future. Financial accounting past. Question number 3, state which is more relevant, financial accounting or management accounting in each of the following situations. To provide information to the income tax department. Income tax department is an external party. Income tax department, Department of Inland Revenue, income tax department is an external party. The external party, you use financial accounting. Financial accounting. To prepare a report on labor productivity, in the factory. The productivity, labor productivity. The labor productivity is an internal factor. It's an internal factor. You consider in management accounting. The management accounting. To provide historical information on annual report in a company's prospectus. To provide historical information, you use a financial accounting. To prepare a cost estimate, right? You estimate your cost. Estimates are prepared by the management accounting. Estimates are prepared by the management accounting. Those are the 4 areas. Estimates are prepared by the management accounting. Estimates are prepared by the management accounting. So, question number 4. So, question number 4, select the most appropriate cost type for each of the following descriptions. Right? The cost of raw materials not directly identifiable. Not directly identifiable. Cost of material not directly identifiable. Not directly identifiable means indirect material. Indirect material. Number 1, second answer, cost type indirect material. The second one, direct material plus direct labor plus direct expenses. The direct material, direct labor, direct expense addition we call prime cost. Prime cost. The cost of which varies directly with the volume of production. Right? If a cost directly varies with the we call variable cost. Directly varies we call variable cost. The manufacturing cost excluding prime cost. Excluding prime cost. The manufacturing cost or cost of production or production cost mainly consists 2 elements. So, what are those 2 elements? Manufacturing cost mainly consists of prime cost and production overhead. The prime cost and production overhead. The production overhead, what are similar terms we use? We can say production overhead, or we can say manufacturing overhead, or we can say factory overheads. Manufacturing overhead, production overheads, factory overheads. Similar terms meaning in different papers you have these terms given. Production overhead, manufacturing overhead and factory overhead. The manufacturing cost excluding prime cost, that is factory overhead or production overhead. The factory overhead or production overhead. 5. cost of direct labor directly traceable, directly identifiable to a product. The cost of direct labor directly identify a product we call direct labor cost. Direct labor cost. Cost of direct labor. Cost of labor directly traceable. Traceable means identifiable to a product we call direct labor. The sixth one, cost which does not vary with relevant range of production. Does not vary in fixed cost. It doesn't vary, does not vary, we call fixed cost. Inclusive of cost of materials, cost of transforming raw material into finished goods. Inclusive of raw material and conversion cost. Raw material cost we convert into raw materials, we convert into finished goods. Inclusive of cost of materials, cost of transforming materials into finished goods we call manufacturing cost. Manufacturing cost. The cost of direct labor, direct expense, factory overheads. Cost of direct labor, direct expense, factory cost. These are the part of manufacturing cost, but excluding direct material. So, material you convert into finished goods. In converting materials into finished goods, you incur these expense. In converting raw materials into finished good, you incur this expense we call conversion cost. You convert your raw material into finished good. You convert your raw material into finished goods. Conversion cost. Again, raw material directly we call, not directly variable, identifiable we call indirect material. Direct labor, direct material, direct expense we call prime cost. Varies directly with the volume we call variable cost. Excluding prime cost called manufacturing cost item we call factory overheads. Cost which does not vary with the relevant range of production we call fixed cost. Inclusive of raw materials, cost of transforming raw materials, finished goods we call manufacturing. Direct labor, direct expense, factory overheads we call conversion cost. Conversion cost. And the costing introduction part is a small area, basic points. We will discuss recent two past paper questions, 2019 question and 2020 question. To go through 2019 question. The 2019 question, you have to specify, you have to mention whether these statements true or false. Right. The first one prepares general purpose financial statements. General purpose financial statement. And the financial statement we divide into two, general purpose financial statements and specific you divide into two, general purpose financial statement and specific purpose financial statement. The general purpose financial statements are common financial statements prepared by the financial accounting. General purpose, commonly you prepare your financial statement by the financial accounting. The specific financial statements. Specific purpose financial statement prepared by the management accounting for a specific reason. Management accounting for a specific reason. It's general purpose financial accounting. This general purpose financial statement, general purpose financial statement is by the financial accounting. State whether the following statement true or false for management accounting to the role of management accounting. The general purpose financial statements are prepared by the financial accounting. The statement is false. Statement false. To prepare financial report in compliance with accounting standard. Accounting standard. And so if you refer back to the previous question, we discussed these differences. Accounting standard we don't have in management accounting. The accounting standard concept, accepted principles and everything used by the financial accounting. To the role of management accounting prepares financial statements, financial reports in compliance with accounting standard. No, it's false. It's false. To provide both past and future information. Both past and future information. To management accounting, you provide past and future information. Past we call historical information. Future budgeted or forecasted information. Management accounting true. That generates information on demand. This point also we discussed in the previous question. Management accounting information you provide on demand. On request you provide information to the managers in management accounting. Statement true. Statement is true. The first two statements are false. Second and third. First two statements are false. Third and fourth statements are correct. That is 2019 question. The 2020 question, state whether the following statements relating to management accounting reports prepared by an entity are true or false. These reports are available for the use of all stakeholders. All stakeholders. The management accounting reports are not available for all stakeholders. The management accounting information is open only for internal parties. Now as an example, if you take Bank of Ceylon, if you just log into Bank of Ceylon website, I don't think you can see Mathura branch accounts. I don't think you can see Bumblebee branch accounts. I don't think you can see Anuradhapura branch accounts. Why? Those are management information. It's not available for external parties. We can't say all. It says all stakeholders. False. It's available only for internal parties. These reports provide present and future information. Yes, in a management accounting you focus present and future both. Correct. Statement is true. These reports are prepared annually on demand. On demand is correct, but annually. The management accounting, there is no specific time period. The management accounting, you don't have specific time period. You don't specify annually, weekly, monthly. Anytime you can prepare. But it says annually, they have specified, no, statement false. The statement is false. These reports are prepared annually on demand. On demand is correct, but not annually. These reports are prepared based on the requirement of the entity. Yes, the management accounting reports you prepare based on the requirement of the entity. Statement is true. Statement is true. The false true. False true. Right. And the 14th lesson, cost and management accounting, as I told you earlier, you have mainly 4 areas: introduction, material costing, labor costing, and overhead costing. Then we will move to material costing part. And in the material costing, so your production start with the material. To maintain a good quality of the product, you have to select material with a good quality. If you are using low quality materials, low quality materials, even your staff are efficient or skilled, but your product quality you can't maintain. And so here in the material costing, we should learn how to obtain the quality material, how to maintain them, and how you issue for the production or selling purpose. So all these activities you are discussing under material costing. Right. So question number 1. To state the documents associated with each of the following steps in the material procurement. The procurement procedure means purchase procedure of a manufacturing company. And so if you go to manufacturing company, these materials are handled by different materials are stored in the main stores premises. This material, there are many parties involved in. You have stores here and the production department. When the production department wants material, it informs the stores. If the stores has material, stores can issue. If not, you have to purchase. For the purchasing, you have purchasing department. The purchases department inform your supplier. The supplier deliver materials to the accounts department. Supplier delivers material to your stores. The accounts department also there to make the payment to your suppliers. This is a normal basic process. Production department, stores, purchasing division, outside supply, and your accounting department. So what are the documents used? here? the production department orders. Who orders? Production department. From whom? The stores. From the stores. And there we use a document called the material requisition note. Material requisition note or stores requisition note. In informing the production department to stores, the stores production department use a document called materials requisition note or stores requisition note. If the stores has materials, it can issue to the production department. If stores is running out of materials, when the stores is running out of materials, it has to inform the purchasing department to purchase it. The stores request purchasing department to purchase it. There they use purchases requisition note. Purchases requisition note. Then the purchasing department has to inform its supplier. The purchasing department has to inform its supplier to deliver materials. The purchasing department requests supplier to deliver material. What's the document? They order. Purchase order. Purchase order. Then the supplier will deliver materials to whom? To the stores. Supplier will deliver material to the stores. Then the stores will record them. The material is stored and recorded. Stored and recorded. There they use the bin card. Bin card. Bin card shows the quantity received, issued and the balance. The material is issued. The material is issued to the production department who issue stores. What's the document used? The material issue note or material transfer note also you can use. Materials issue note or material transfer note to transfer from stores to the production department. This is used to the production department. The production department orders from the stores material requisition note or stores requisition note. Stores requisition purchasing department, purchases requisition note. Purchasing department requests supplier, purchase order, material is stored and recorded, bin card, material is issued, material issue note or materials transfer note, issue note or transfer note. To show the maximum stock level, reorder level, minimum stock level and safety stock. Right. After this, if you take this chart and with the consumption of material, now say this is your maximum stock level, the maximum stock level, and with the consumption of the stock, with the consumption of your stock, the stock level reduces, it comes down. When it comes to a certain level, you inform your supplier to deliver materials. You inform your supplier to deliver material. This is called reorder level. This is called reorder level. The reorder level is the inventory level at which you place the next order. The reorder level is the inventory level at which you make your next order. Right. And even though you order, you don't get the stock on the store. Until you receive the stock, you are using. It comes. Then this stock level, this is called minimum stock level. The minimum stock level. The minimum stock level. Then you receive the stock, and the stock you go to your maximum. This is a continuous process. Again, you start consumption, stock level come down. When it comes to reorder level, you inform your supplier to deliver. Until he delivers the stock, you consume. Come to minimum, and again goes to, it's a continuous process. After this gap we call buffer stock or safety stock. This gap called safety stock or buffer stock. So why do we maintain a safe stock or a buffer stock? If there is a delay, unexpected delay in receiving material, you can use this buffer stock. You can use this buffer stock or safety stock. There are maximum stock level, reorder level, minimum stock level, safety stock. Right? And if you take this graph, this is the point you inform your supplier to deliver material. This is the day you actually receive the material. There is a time gap here. So this is the day you inform your supplier to deliver the material. This actual day you receive the material, this time gap we call lead time. Lead time or reorder period or delivery period. The time gap between date of order and date of receiving we call lead time or delivery period or reorder period. Lead time, delivery period or reorder period. Then the first one you have maximum stock level. This maximum stock level, this is your reorder level, this is your minimum stock level, and this is your safety stock. This is your safety stock. And then the material cost in another specific area is calculation of stock levels. The reorder level, a maximum stock level, minimum stock level and average stock level. The reorder level, a maximum stock level, minimum stock level and the average stock level. And here production from the external supplier according to estimates maximum consumption. Maximum consumption, if you note down the detail, the consumption, maximum, minimum. Maximum consumption, minimum consumption. Maximum consumption is 1500 units. And the minimum consumption is 500 units. The minimum consumption is 500 units per month. Further, maximum delivery period. Delivery period, other terms we use lead time or reorder period. The lead time or delivery period, the maximum delivery period, maximum 4 months, minimum 2 months. Those are the details. The maximum consumption is 1500, minimum is 500. The maximum delivery period is 4 months, minimum delivery period is 2 months. The requirement, reorder level. The reorder level. So what's the formula to calculate the reorder level? And the reorder level, how you define or how you identify the reorder level? And the reorder level is the inventory level at which you make the next order. Inventory level at which you make the next order. And in deciding reorder level, you have to consumption your maximum. You have to consider your maximum consumption and maximum lead time. What's the logic in the reorder level? Even though you are running at your maximum consumption, or your supplier takes maximum time to deliver the stock, you are not running out of inventories. Now the reorder level equal, the maximum consumption into maximum lead time. The maximum consumption into maximum lead time or delivery period. How much was the maximum consumption? The maximum consumption was 1500. The maximum consumption was 1500. Maximum lead time, the maximum lead time was 4 months. And your reorder level is 1500 into 4, 6000 units. 6000 units. 1500 into 4, 6000 units. The answer number 1. The reorder level, maximum consumption into maximum lead time, 1500 into 4, 6000 units. The answer number 1. So what is the minimum stock level? What's the minimum stock level? What's the minimum stock level? That's question number 10. This is 9. The 10th question. Minimum stock level. The minimum stock level equal reorder level. You decide based on reorder level. The reorder level minus minimum consumption into minimum lead time. Minimum consumption into minimum lead time. How much was minimum consumption? The reorder level equal minimum stock level equal average consumption into average lead time. Average consumption into average lead time. Average consumption into average lead time. And the reorder level already calculated. The reorder level already calculated how much? 6000 units. 6000 units. The average consumption. The average consumption equal maximum consumption plus minimum consumption divided by 2. The maximum how much? 1500. Minimum consumption 500 divided by 2. Divided by 2 into average lead time. The average lead time maximum 4, minimum 2 divided by 2. Average of 2 values. Average of 2 values. So 6000, 1500 plus 500 divided by 2, 1000. The 4 plus 2 divided by 2, 3. the 6,000 minus 3,000, your minimum stock level is 3,000 units. Minimum stock level is 3,000 units. Right. The minimum stock level is 3,000 units. The question number 10. What is the maximum stock level? What's the maximum stock level? The question number 10 calculations. If you want again calculations. Now the question number 11, what is the maximum stock level? What's the maximum stock level? What's the maximum stock level? Question number 11. The maximum stock level, this is question number 11. The maximum stock level equal, reorder level minus minimum consumption into minimum lead time plus your reorder quantity or economic order quantity. The maximum stock level equal, question number 11, the reorder level minus minimum consumption into minimum lead time plus your reorder quantity. The reorder level already we calculated 6,000 units. The reorder level 6,000 units. The minimum consumption 500 and minimum lead time 2. Right. So what was the reorder quantity given? Reorder quantity is given or economic order quantity. Reorder quantity or economic order quantity. It was given in the question. Economic order quantity. Economic order quantity was given. The economic order quantity. The economic order quantity is 4,000 units. The economic order quantity was 4,000 units. Look at the values. The 6,000 equal 1,000, 4,000, 9,000 units. What's the maximum stock level? 9,000 units. The 9,000 units. The answer number 3, maximum stock level. So what is the average stock level? Average stock level, assuming that the company does not use or does not consider reorder quantity or economic order quantity in the computation of average stock level. And the average stock level, and it's very difficult to maintain an average value for the inventory. Why? Inventory always subjected to changes. Inventory always subjected to changes. This is question number 12. And to calculate the average stock level, you have two formula. To calculate average stock level, you can use first one, the maximum stock level. The maximum stock level plus minimum stock level divided by 2. The maximum stock level plus minimum stock level divided by 2, or minimum plus maximum divided by 2. That's the first formula. The second formula, for the minimum stock level, you take half of your EO, QO, reorder quantity, or reorder quantity half of this. These two formula you can use to calculate the average stock level, but you know that both formula you don't get the correct same answer. From both formula you don't get the same answer. Why? And the average inventory is always subject to change. It's very difficult to maintain an average value. It's very difficult to maintain an average value. Now what's the question? Calculate the average stock level assuming that the company does not consider the reorder. The company doesn't consider this one. Does not consider. Now the second formula is out. You can use the second formula in calculating. Then you take the maximum stock level plus minimum stock level divided by 2. The maximum stock level plus minimum stock level divided by 2. How much the minimum? The maximum stock level you got 9,000, minimum 3,000. The 9,000 plus 3,000 divided by 2. 9,000 plus 3,000 divided by 2. 12,000 divided by 2, 6,000 units. 6,000 units. The answer number 2. Second answer. Second answer. The 10th question, third answer. 10th question, fifth answer, 3,000 units. The 11th question, 9,000 units. The 12th question, 6,000 units. Show a annual ordering cost. Annual ordering cost. Right. And the inventory related cost we divide into two: ordering cost and holding cost. Inventory related cost, total inventory related cost we divide into two. Total cost equal you order the item, ordering cost, and you have to maintain the item, holding cost. Total inventory related cost consists of two factors: ordering cost and holding cost. Ordering cost and holding cost. Remember this ordering cost and holding cost, two cost elements. So with the inventory level, ordering cost decrease. How you calculate ordering cost? Later question we will discuss. Ordering cost equal number of orders into cost per order. Ordering cost, number of orders into cost per order. When your number of orders, say your demand is 24,000. If you order 1,000, you have to make 24 orders. If you order 2,000, 24,000 divided by 2,000, you have to make only 12 orders. Right? When the number of units you include in an order increase, number of orders decrease. When the number of units you include in an order increase, number of orders decrease. As a result, your ordering cost reduces. So as a result, your ordering cost reduces. The ordering cost reduces. Ordering cost. According to the chart, you want to name that as A. You want to name that as A. Holding cost. So when you order more units, you have to maintain more units. When you order more units, you have to maintain more number of units in your holding cost. The holding cost increase. The holding cost increases. Holding cost or carrying cost. So these two cost items are negatively related. Then total cost, it comes down for a specific situation, then it increases. This is called a total cost. Total cost. And the minimum point of the total cost curve is your economic order quantity. Minimum point of your total cost is your economic order quantity. Economic order quantity. Right. And if you take the question wants you to name this as A, B, C, D. This is ordering cost. A. Ordering cost. But then this is holding cost. Holding cost or ordering cost A. Holding cost B. The total cost, total inventory related cost, it reduces to a certain level, but again increases. C. This is D, economic order quantity. Economic order quantity. This is your minimum point of your total cost curve, minimum point. Use the following information to answer question number 14 and 15. The following information relates to a raw material. The monthly consumption. The monthly consumption is given. It's monthly consumption. Unit price, ordering cost 40 rupees per order, annual carrying cost, maintenance cost or holding cost 10% on unit price. 10% on unit price. Unit price how much? 30. 10% on that. 10% on that is 3. 10% on that is 3. What is the economic order quantity of the above material? The economic order quantity. The economic order quantity is the number of units you should include in an order to minimize the stock related cost. Number of units you should include in an order to minimize the stock related cost. And the EOQ, you can use a formula. EOQ or economic order quantity equal to DCO CH square root of this. But these are not standard symbol. You can use XYZ also. The 2 is a constant value. 2 is a constant value. D is the annual demand. D is annual demand. D is annual demand. CO, cost per order. CO, cost per order. CH, here CH, holding cost. The holding cost. You can use the information in the question. 2 is a constant value. The 2 is a constant value. 2. Annual demand or annual consumption. The monthly consumption is given. The monthly consumption is given. Annual consumption you multiply by 12. 12 months for the year. Annual consumption. The 500, the monthly consumption for the year, annual demand or annual consumption. The annual consumption you multiply by 12. And cost per order, how much was given? The cost per order is 40. 40 divided by holding cost per unit. How much is the holding cost per unit? The holding cost per unit is 30% into 30 into 10%. 30 into 10%. 3 rupees. You can get the answer of this. And 60,000 square root of 160,000 square root, and you can write this 16 into, you can cut 2 zeros, or you can write here 16 into 10,000. These 2 zeros you can take, cut, and you have another 2. And square root of 16 is 4. You can separately calculate the square root of these two. Square root of 160,000, you can write 16 into 10,000. So 16 into 10,000. Then you can cut these 2 zeros, take these 2 zeros down, and 16 you record, 16 you calculate separately square root, you get 400 units. The answer is 400 units. 400 units. The economic order quantities. Answer number 2, 400 units. Answer number 2, 400 units. What is the number of orders to be placed or to be made for the year? The number of orders. The number of orders mean how many times you have to purchase. The number of orders equal annual consumption or annual demand or consumption divided by economic order quantity or pre-order quantity. The number of orders equal annual demand or annual consumption divided by economic order quantity. How much was our annual demand? It was monthly consumption. The monthly consumption 500 for the year, 12 months. 500 into 12, EOQ we calculated 400. EOQ you calculate 400 units. The 500 is the demand, For 12 months, 500 into 12, 400 units is the economic order quantity. You can calculate the number of orders. 15 orders. The number of orders 15. 15 orders. The following information provided by a business: order quantity, the order quantity, ordering cost and holding cost. Order quantity is given, ordering cost is given, holding cost is given. Annual material consumption is 24,000. The annual consumption is 24,000. What is the cost to be incurred by this company to make an order, or cost per order? How much this company should spend or should incur to make an order? And here you can calculate number of orders. Here you can calculate number of orders. So how you calculate number of orders? Number of orders equal consumption, annual consumption divided by ordering quantity. Number of orders equal annual consumption divided by ordering quantity. So we'll take the first situation. How much annual demand? 24,000. Annual demand 24,000. How many units you order here? You order 2,000. So how many orders you have to place? At a time, if you order 2,000 units, you have to order 12 times. 12 times. And the 12 orders. 12 orders. To calculate for this, second situation, how many orders you have to put? Consumption is fixed, 24,000. Consumption is 24,000. When you order 8,000, you order how many times? 3 times. 3 orders. 3 orders. 3 orders. Now the first situation, if you order 2,000, you have to make 12 orders to satisfy your annual demand. If you order second situation 8,000, if you order 8,000, you have to make 3 orders. The question requirement is cost per order. And how you calculate ordering cost? Ordering cost equal number of orders into cost per order. Cost per order. Number of orders into cost per order. Right. The first situation. Number of orders 12. Number of orders 12. Cost per order we don't know, but we know ordering cost. We know ordering cost. How much is ordering cost? 18,000. 18,000 into cost per order. So how much is cost per order equal? 18,000 divided by 12. How much cost per order? 18,000 divided by 12. 1,500 rupees. 1,500 rupees. Right. And then we have learned the cost per order remain constant. Economic order quantity, we assume that cost per order remain constant. If you want to double check, use the second situation. Use the second situation. The second situation, how much? Second situation, how much is the ordering cost? The ordering cost here 8,000. Ordering cost here 4,500. The ordering cost 4,500. So 4,500 equal how many orders? How many orders? We calculated number of orders 3. We have to make 3 orders. And again, cost per order 4,500 divided by 3 remains constant 1,500. The cost per order 1,500. How you calculate ordering cost? Number of orders into cost per order. Number of orders into cost per order. Now the cost per order how much? Cost per order is 1,500 rupees. 1,500 rupees. How you calculate it? The first we calculated how many orders you place. First situation, second situation, how many orders you place, and then we use ordering cost formula. The ordering cost equal number of orders into cost per order. Number of orders into cost per order. Right. The 17th question, what is the cost to be incurred by this company to maintain 1 unit of the above? This is called holding cost per unit. Holding cost or carrying cost per unit. So we will go back. Right. And the holding cost is equal. Holding cost or carrying cost. We call holding cost or carrying cost. The holding cost or carrying cost equal. The holding cost or carrying cost equal. Holding cost or carrying cost equal. Holding cost equal average stock into holding cost per unit. Total holding cost equal annual holding cost equal annual holding cost equal or total holding cost equal annual holding cost equal average stock divided by holding cost per unit. Average holding cost equal average annual holding cost equal average stock divided by holding cost per unit. So here you can calculate average stock. And the average stock how you calculate? for EOQ computation. Right? For EOQ computation, how you calculate average stock? Half of order in quantity. From order in quantity, half of 50% you take as average stock for the computation of economic order quantity. Half of your order in quantity. Half of your order in quantity. Here you can calculate average stock. Average stock. When you order 2000, half of that is average stock 1000 units, 50% of half. When you order 2000, your average stock is 1000. When you order 8000, half of that is 4000 units. 4000 units. Right. The holding cost is given. The holding cost is given. How much? 4500. We will take the first situation. The holding cost 4500 equal. The holding cost 4500 is equal average stock. Average stock how much? 1000. Average stock 1000 into holding cost per unit. The holding cost per unit. And the holding cost per unit equal $4,500 divided by 1000, 4 rupees and 50 cents. 4 rupees and 50 cents. The holding cost per unit equal 4 rupees and 50 cents. And we have learned holding cost per unit is constant. Holding cost per unit is constant. Here we got 4500, sorry, 4 rupees and 50 cents. We will double check by taking the second situation. The second situation, total holding cost is 18,000. Total holding cost is 18,000. 18,000 equal average stock. Average stock how much? We calculate in second situation. Average stock is 4000. The average stock is 4000. The 4000 into holding cost per unit. Holding cost per unit. Then the holding cost per unit equal 18,000 divided by 4000. Again you get 4 rupees and 50 cents. Why? Holding cost per unit remain constant. The holding cost per unit remains constant. Holding cost per unit remains constant. 4 rupees and 50 cents. That was the question. Next question. The holding cost per unit how much? 4 rupees and 50 cents. 4 rupees and 50 cents. The previously we calculated cost per order 1500, then holding cost per unit 4 rupees and 50 cents. To calculate the number of units to be included in order to minimize inventory related cost. Number of units to be included in order to minimize the inventory related cost. What does it mean? Minimize inventory related cost. We call economic order quantity. We call economic order quantity. Right. The EOQ formula earlier we discussed. EOQ formula we discussed earlier. the EOQ equal economic order quantity is equal EOQ equal to DCO CH square root of this. The 2 is a constant value. Annual demand was given in the question. It is 24,000. 24,000. Annual consumption. CO cost per order we calculated 1,500. CH holding cost per unit is 4 rupees and 50 cents. 4 rupees and 50 cents. You can calculate the answer. So once you multiply, you get 16 million. 16 million, the square root of this. Square root of 16 million, you can write. Square root of 16 million, you can write 16 square root into 1 million square root. And you can cut these 3 zeros, there you get 1000. Square root of 16 is 4. So 4 into 1000, 4000 is the economic order quantity. 4000 is the economic order quantity. So 16 million, you can write 16 into 1 million. 16 into 1 million, 16 million, that you can write 16 into 1 million, 16 into 1 million, 16 square root is 4, 1 million square root of 1 million is 1000, 4000 units. So again the calculation. So 16,000 units. EOQ calculations, we got 4,000 units. EOQ 4,000 units. The answer number 5. To state the main objective of maintenance stores ledger. And the stores ledger and bin card. Bin card and stores ledger. The bin card you record stock units received, unit issued and the balance. They are meant to read a document. In a bin card, you record quantity received, quantity issued and balance, only quantities. This bin card you further expand with values we call stores ledger. Stores ledger. In the stores ledger you have received quantity and the value, issues quantity and the value, balance quantity and the value. Then what's the purpose of maintaining stores ledgers? Purpose of maintaining the stores ledger to identify the stock value. To identify the stock value. Value include quantity and into multiply by units, you get the stock value. Quantities into unit price. Right. The main purpose to identify the stock value. The main purpose to identify the stock value. The state 2 source document used to update the stores ledger. So what do you have in the stores ledger? You have receipts, issues, balance, values. When you receive stock, what's the document you use? Goods received note. To record the receipt of materials, you can use goods received note. In receiving goods, you record goods received note. And issue win. Issue win, you have material issue note, or sometimes you can base the material requisition note, or sometimes you can use material transfer note. To record receipts, or sometimes you return material return note. To record receipts, you use goods received note. To issue material transfer note, issue note, or you can use sometimes you return material return note. So we discuss material costing also, the main areas in the material costing. So as I told you at the beginning, this lesson mainly we identify 4 areas. This lesson we identify mainly 4 areas: introduction, material costing, and the labor costing. Introduction, material costing, labor costing, and overhead costing. And the overhead costing we will discuss in a different lesson. In different lesson we will discuss overhead costing. Now we will brief the questions from labor costing. The labor costing. And the labor costing. When you consider cost items or elements of cost, the labor is the sensitive factor. Labor is the sensitive factor. Why? To whatever the action taken by the management, employees will react to. Employees will react. If you cut down their salaries, they will go on strike, they will go on picketing, they won't work. Labor, sensitive factor. So in controlling labor also, an important function in cost and management accounting. So what are the items you include in labor costing? What are the items you include in labor costing? All the payments made to employees and on behalf of employees, you record under labor costing. The certain payments you made to employees, example, salaries and wages. Certain payments you made on behalf of employees, employees provident fund on behalf of employees, employees trust fund on behalf of employees. So this includes all the payments made to employees and on behalf of employees. We will discuss few questions from labor costing. The following are few documents used to record the labor time of an organization. To use labor time of an organization, you use different records, right? And the labor time, the company will maintain 2 types of records. To identify the time in and time out, you maintain attendance records. To identify the time in and time out, attendance record. Now, to identify the actual time contributed for the production, we maintain active time records. The active time record, okay. Attendance record and active time records. The attendance record may be a manual book to put your signature, or fingerprint machines, or barcode readers, or time recording machines. And the question, attendance register. Remember, this is, as the name says, attendance register. You can take A. Time sheet. The time sheet to identify the time they are allocated or spent for the production or service. The time sheet is an active time record. Active time record. But sometimes this time sheet you may prepare on daily basis or sometime on weekly basis. If you prepare on daily basis, we call daily time sheet also active time record. If you prepare on weekly basis, we call weekly time records. The idle time. The idle time records you maintain due to various reasons. Employees won't work. Sometime power cut, then raw material shortages, picketing, strike, meeting, they won't work. To identify the active time only, you maintain this time, idle time sheet. Also, you have to control it. You have to identify why this idle time has come, and you should take steps to control it. The fingerprint machine to identify time in and time out. Worksheet also to identify the active time. Fingerprint machine to identify time in and time out. Then the out of the statements are A and G. A and G are attendance records. B, C, D, E, F are active time records. Then the answer number 5. The answer number 5. A company which pays wages based on the units completed provide following information. The number of units to be completed by an employee within 8 hours work. This is a standard production. Within 8 hours you have to manufacture 50 units. Wage rate per unit. The per unit is 20. Excess units, if any, are paid at the rate of 5 rupees per unit over the normal rate. 5 rupees over the normal rate. So normal rate is 20 over 5. 25 rupees for the excess units is entitled for 25 rupees per unit. The number of units completed by each employee within 8 hours. Tiny 60 unit, Bashini 48 units. Right. What is the total wages to be paid? Total wages to be paid. Here we have 2 employees. Ayani has completed 60 units. Bashini has completed 48 units. Within 8 hours, standard production within 8 hours is 50. Wage rate per unit is 20. If you excess production, you have to pay 25 rupees per unit to make the calculation. Right. So here we have 2 employees. Who are 2 employees? Ayani and Bashini. The Ayani, how many units she has completed? She has completed 60 units. But standard production is 50. So this 60 unit you have to separately pay. This 60 unit you have to separately pay. 60 unit first 50 at normal rate. That's normal rate. Normal rate is 20 rupees. So plus 50 units you have to pay at 20 rupees. Within 8 hours work, they are supposed to complete 50 units. But Ayani has completed 60 units. She has an extra production, excess 60 minus 50, excess 10 units. Excess 10 units. The excess units you pay at the rate of 25. Excess unit you pay at the rate of 25. This is Ayani, first employee. The second employee. Who is the second employee? Bashini. So Bashini is the second employee. So what's the production? She has completed 48 units, whereas the standard production is 50 units. So she is below the standard. She is below the standard. She has completed 48 units. Standard rate is 20 rupees. You can get the total wages. And she has completed 60 unit. First 50 you pay at 20 rupees normal rate. Extra production 10 units you pay at the higher rate, 25 rupees per unit. So she get 50 units into 20, you get 1000 units, 1000 rupees and 250. Totally she get 1250 plus Bashini's payment for 48 into 20, 960. 1000 plus 250 plus 960 altogether the 2210. Total wages 2210. Ayani, she has an extra production of 10, you pay at higher rate 25. Bashini below the target 48 units, 20 rupees per unit. The calculations 2210 addition come to 2210. 2210. Use the following information to answer question number 22, 3, 4 and 5. The following relates to work details of an employee who completed job 1 first. There's a point here. Job 1 first and job 2 subsequently. On a given day, these details are given to an employee who completed job 1 first and job 2 subsequently. He was not doing the job parallelly. First he completed job 1 and has gone to job 2. Job 1 and job 2. The time allocated for job 1 8 hours, time taken allocated and taken. The allocated and taken job 8 and job 1 and job 2. Job 1 and job 2. Time allocated, job 1 is 8 hours, for job 2 3 hours. but employee has taken first job 6 hours. So here he has saved 2 hours. Saved. So from first job he has saved 2 hours. The second job he hasn't saved. No saving. The normal working hours is 8 hours. Normal working hours is 8 hours. But if you consider here, he has taken 9 hours. He has taken 9 hours. Time taken, first job 6 hours, second job 3 hours. He has taken 9 hours. The normal rate is 9 hours taken, but normal rate, normal number of hours 8. So you can understand he has worked 1 overtime hour. Normal hours 8, he has to work 9 hours, so 1 overtime. Normal working hours 8, he has worked 9 hours, 1 hour overtime. Overtime pay rate, normal hourly rate is 1000. Normal hourly rate is 1000. Overtime pay rate is 150% over the normal pay rate. The normal time rate per hour is 1000. Overtime rate is how much? 1000 rupees into 150%. And the overtime rate how much? 1500 rupees. If time saved 75% of the normal time rate. Normal rate is 1000, 75% is for time saving. Those are the details. So how many hours he has saved? 2 hours. 2 hours he has saved. How many overtime hours? Overtime hours? 1 hour overtime. Why? For the day he has to work 8 hours only, 6 for the first job plus 3 hours for the second job. Altogether he has taken 9 hours, 8 hours normal hour, extra 1 hour overtime. We will go for the requirement. Compute the, question number 2, compute the incentive payment payable for this employee. Incentive payment. The incentive payment. What about incentive payment? Incentive paid for the time saved. For the time saved. You are paying an incentive for the time saved. How many hours he has saved? How many hours he has saved? 2 hours. Job 1, standard time allocation. Standard time allocation for job 1. Job 1 you have allocated. For job 1, you have allocated 8 hours. But he has taken only 6 hours. So how many hours he has saved? 2 hours saved. Incentive paid for time saved is 75%. 75% of time saved. How many hours you have saved? 2 hours. What's the percentage you pay? 75%. What's the rate per hour? The hourly rate is 1000 rupees. You can make the calculations. Compute the incentive payments payable to this employee. How many hours he has saved? Time saved we calculated 2 hours. 2 hours saved. For 75% you make the incentive payment. Hourly rate is 1000. Hourly rate is 1000. If you want again, 8 hours job he has completed in 6 hours, saving 2 hours. For that you pay 75% at the rate of 1000 rupees. The 2 hours saved, 75% of that you pay, then 1000 rupees hourly rate. How much is the amount? ₹1,500. 1,500 rupees. To question 23. Compute the income earned by this employee from job 1. Job 1. The job 1, the how many hours he has used? For job 1, how many hours he has used? He has used how many hours? He has taken 6 hours. He has taken 6 hours. For these 6 hours, the time taken, basic payment. The time taken, basic earning. He has taken 6 hours. 6 hours, the hourly rate how much? The normal pay rate is 1000. The normal pay rate 1000, and here 6000. The plus for that job 1 he get an incentive payment. Why? It's clear. These 2 hours he has saved from first job. For that only he gets his incentive payment. Incentive payment how much? We calculated the incentive payment. We calculated how much incentive payment. Incentive payment 1500. So altogether job 1, from job 1 he gets 1500. From job 1 he gets 1500. Incentive payment 1500 and basic earning 6000. Altogether from job 1 he get 7500. Basic earning for 6 hours at 1000, 6000. Incentive payment 1500. Altogether he will receive 7500. So from job 1 he will get 7500 rupees from job 1. $7,500. To 24, compute the overtime allowance. Overtime allowance payable. So how you identify the overtime allowance? So how many hours they have to work? This company you have to work 8 hours. You have to work 8 hours. But the time taken, the first job 6 hours plus second job 3 hours, altogether 9 hours. First job he has taken 6 hours, second job he has taken 3 hours, altogether he has taken 9 hours. He has taken 9 hours. But normal working hours 8. So 9 minus 8, he has worked 1 hour overtime. To identify clearly, for the first job, job 1, he has worked for 6 hours, second job he has spent 3 hours. Altogether he has worked 9 hours, whereas the company's normal working hours 8. The overtime 1 hour. What's overtime rate? Overtime pay rate is 150 rupees. 150% over the normal rate. And the OT rate how much? OT rate 1000 rupees over that 150. 1000 into 150%. Overtime rate is 1000 1500 into 1 hour overtime. The overtime the 1 hour into 1500 overtime rate. Overtime rate is 1 overtime hour 1500. Do you get? The overtime rupees is 1500 overtime. He has worked 1 hour overtime. Our rate is 1500. So overtime is 1500 rupees. The question number 25. What compute the income earned by this employee from job 2? From job 2. Income earned from job number 2. Now the second job. It's clearly mentioned he completed job 1 first. Job 1 first and job 2 subsequently. He has first completed the job 1 and he has moved to second job. Then it's clear overtime is for the second job. Overtime for the second job. Then he hasn't been doing the job, both jobs parallelly. He has first completed the first job and moved to the second job. Now the second job he has taken 3 hours. For the second job he has taken 3 hours. You have to calculate income from job number 2. The job number 2 he has taken 3 hours. Time taken 3 hours. These 3 hours, first 2 hours normal rate. 2 hours normal rate is 1000, 2000. Overtime for the first balance 1 hour. 1 hour overtime 40. We calculated 1500 rupees. So he has earned 3500 rupees. This overtime we calculated again in the previous one. $2,000, 1,500, 3,500. The first job overtime calculation here. From job number 3, he has earned 3,500 rupees. From job number 3, he has earned 3,500 rupees. Why? He has spent 3 hours, first 2 hours at normal rate, balance 1 hour at overtime. The computed income from second job he has earned 3,500. This is very important. Job 1 first and job 2 subsequently. Job 1 first and job 2 subsequently. He has not been doing both jobs parallelly. He has not been doing. Then overtime is specially for the second job. The answers 1,500, 7,500, 1,500 and 3,500. To question number 26. and the employee work 50 hours. So 50 hours instead of standard 40 hours. So the standard hours 50, employee has worked 40 hours. So standard 40 hours, he has worked 50 hours, which means he has worked 10 hours extra. And he is entitled for an efficiency bonus of 1000 rupees per week. Per week, efficiency bonus 1000 rupees per week. Normal pay rate per is 100. Normal pay rate is 100. Normal rate 100. Overtime rate is twice the normal rate. Normal rate is how much? 100. Overtime rate, that into 2. Overtime rate is 200 rupees. To calculate the total wages for the week. Total wages for the week. So his total wages consist of 3 elements here: basic earnings for 40 hours, efficiency bonus, and plus overtime payment. His salary consists of basic earnings for 40 hours plus efficiency bonus and overtime payment. We'll make the calculation. The basic earnings. The basic earning or normal hour. So always you pay basic earning for normal hours. So how many normal hours? 40. Normal hours 40. The hourly rate how much? The hourly rate, normal rate is 100 into 100. And he gets the efficiency bonus. Efficiency bonus 1000 rupees per week. The efficiency bonus 1000 rupees per week. And overtime payment. Overtime rate is 200. Overtime rate is 200. How many overtime hours? 10 hours. How you can say 10? How you can say 10? Normal working hours 40. Normal working hours 40. He has worked 50 hours. He has worked 50 hours. 50 minus 40. He has worked 10 overtime hours. 10 overtime hours. Overtime rate is twice the normal rate. The normal rate is 100. Twice the normal rate. Overtime rate is 200. You can make the calculation addition. 4,000, 1,000, 2,000. So his total earning is 7,000 rupees. His total earning is 7,000 rupees. Basic plus efficiency bonus plus overtime payment. Altogether, he gets 7,000 rupees. He'll earn 7,000 rupees. Use the following information to answer question number 27, 28 and 29. The following information relates to 3 employees in a factory. Number of hours work. The number of hours work. Mr. Sunil has worked 30 hours, Mr. Timal 40 hours and Mr. Kamal 50 hours. The hourly rate. Mr. Sunil 500, Nimal 600 and Mr. Kamal 700 rupees. You may think why different rates? There may be different positions, different responsibilities, then our rate will change. The units produce. Units produce. Product P by Mr. Sunil and Mr. Nimal. Mr. Sunil has produced 150 units whereas Ms. Nimal 180. But our third employee, Mr. Kamal, has produced 240 units. Under normal conditions, time allowed to produce product P is 12 minutes. Product P standard rate 12 minutes and for product Q 20 minutes. To produce product P, you are allowed 12 minutes and for product Q 20 minutes are allowed. So 3 employees, their production, their hourly rate, their hours worked and standard time allocation for each product are given. So question number 27. Compute the total earnings of each employee. Assuming that the company uses a flat time rate. Right. In a flat time rate, you don't consider about time saving. You make the payment for the hours spent, hours worked. In the flat time rate, your earnings equal. In a flat time rate, how you calculate your earning? Your earning equal number of hours. This is question number 27. Flat time rate, your earning equal number of hours worked. Into hourly rate. Number of hours worked into hourly rate. If you go back to the question, we have 3 employees. Who are 3 employees? Two or 3 employees. Mr. Sunil, Mr. Nimal and Mr. Kamal. The hourly rate we will calculate separately. The first employee who? Mr. Sunil. Mr. Sunil, how many hours he has worked? He has worked 30 hours. Hourly rate is 500. 30 hours he has worked. Hourly rate is 500. 30 hours into 500. Then the second employee. Who is the second employee? Mr. Nimal. Mr. Nimal has worked 40 hours. What is the hourly rate? 600. Mr. Nimal, he has worked 40 hours, each hour at 600 rupees. Then the third employee is Mr. Kamal. He has worked 50 hours, hourly rate is 700. Third employee, Mr. Kamal. Mr. Kamal has worked 50 hours. His hourly rate is 700. Then you can calculate the values. Mr. Sunil, 30 hours into 500. he has earned 15,000 rupees. Mr. Nimal, 40 hours at 600, 24,000 rupees. Mr. Kamal, 50 hours at 700, 35,000 rupees. Answers: 15,000, 24,000, 35,000 rupees. So question number 28. Compute the time saved. Time saved or extra time used. Compute the time saved or extra time used. So how can you calculate time saved? This is our question number 28. Question number 28. Time saved. The time saved equal time allowed minus time taken. Right? The time saved equal time allowed minus time taken. Right. But who are the employees? Who are 3 employees? So we have Mr. There are 3 employees. We have 3 employees. Mr. Sunil, Mr. Nimal and Mr. Kamal. Time allowed. So Mr. Sunil, he has completed product P. Right. You calculate for Mr. Sunil. He has completed product. Mr. Sunil. He has completed product P. How many units? He has completed 150 units. Right? 150 units. He has completed 150 units. 150 units. So per unit you allow 12 minutes. 150 units per unit, 12 minutes. Number of minutes. So how many hours he has taken? He has taken 30 hours. This is 30 hours. This is 12 minutes. You can convert into hours by dividing 60. 60 minutes per hour. That's how you divide it by 60. Then 150 into 12. 1800. 1800 divided by 60 minus 30. You get 30 minus 30. He hasn't saved time. The time saving is 0. He hasn't saved time. Mr. Sunil, he has completed product P. For product P, you allow 12 minutes. For product P, 12 minutes are allowed. 150 units into 12 minutes, you can identify how many minutes he has used. To convert into hours, you divide by 60. Then time allowed also 30 hours, time taken 30 hours, 0 time saving. Right. So the first employee has no saving. To calculate the second employee, so is the second employee Mr. Nimal. So Mr. Nimal has completed again 108 units product P. Mr. Nimal, he has completed product P 108 units. 108 units. Each unit 15 minutes. He has taken 40 hours. 40 hours. So this is 40 hours. To convert this also into hours, you divide by 60. So you divide by 60. You divide by 60. 60 minutes per hour. 180 into 15. So it's 12 put up, and then product P 12 minutes. 12 minutes. "36 hours allowed." He has taken 40 hours. He has taken extra 4 hours. He hasn't saved, but he has taken extra 4 hours. He has taken extra 4 hours. No time saving. Then we'll go to third employee. So is our third employee? Third employee is Mr. Kamal. So Mr. Kamal, he has completed product Q. He has completed product Q. Product Q. So how many units he has completed? He has completed 240 units. Employee's name is Mr. Kamal. The product Q 240 units. The product Q you allow 20 minutes. Maybe more time consuming, 20 minutes. You multiply by 20 minutes. The time taken by Mr. Kamal is 50 hours. He has taken 50 hours. This is 50 hours. This is number of minutes. To convert into hours, we divide by 60 by 60 minutes per hour. (80 minus 50), so he has saved 30 hours. He has saved 30 hours saved. He has saved 30 hours. Then you calculate it. If you check the answers again, first employee has no savings. Second employee has taken 4 extra hours. Third employee has saved 30 hours. Compute the time saved or extra time taken. If you refer back to your calculation, Mr. Sunil has no time saving. Mr. Nimal has taken extra 4 hours, and last employee Mr. Kamal has saved 30 hours. The next question, if a bonus paid on 50% of the time saved, if the bonus is paid 50 hours of the time saved, calculate the amount of bonus to be paid by the company. If a bonus is paid on 50% of the time saved, calculate the amount of bonus to be paid. Here only Mr. Kamal has saved. Only Mr. Kamal has saved. So how many hours he has saved? He has saved 30 hours. So the bonus, question number 29. 29. So he has saved 30 hours. You pay 50% of that as bonus. How you calculate the bonus? Time saved. The bonus equal time saved into 50%. Time saved into 50% into bonus rate, hourly rate. 50% into hourly rate. What was Mr. Kamal's hourly rate? He's paid 700 rupees. He's paid 700 rupees. His hourly rate is 700 rupees. Or if you write as a formula, this is hourly rate. Hourly rate. Time saved into a bonus percentage, 50% hourly rate. The time saved. The time saved we have now, how many hours? 30 hours. The bonus percentage 50%. 50% bonus percentage. And the hourly rate who saved this time was saved by Mr. Kamal. His hourly rate is 700 rupees. His hourly rate is 700 rupees. 30 hours saved into 50%. 15 into 700, to 10,500 rupees the bonus he has earned. So this is the time saved. We calculate the previous question. 10,500 is this bonus. 10,500 is the bonus earned by him. The 29th question, bonus earned by him, we calculated. Bonus earned by him is 10,500 rupees. 10,500 rupees is his bonus. The 10,500 is his bonus. If you refer back the answers, each employee's salaries, Mrs. Sunil 10,000, answer for 27, Mrs. Sunil's 15,000, Mr. Nimal 24,000, Mr. Kamal 35,000. 28, time saved, Mr. Sunil no time saving, Mr. Nimal has taken extra hours, Mr. Kamal only has saved time. The bonus is paid at 50%. Bonus calculation. When you pay bonus 50%, your bonus amount is 10,500. 10,500. The given below extract of the wages report of a company, earnings, basic and overtime, gross salary, deductions, loan installment, festival advance, EPF, net salary, contribution for EPF and ETF. The required double entries To post the above extract in the general ledger, the company maintains salaries and wages control account. Company maintains salaries and wages control account. Right. And the double entries. The double entries start with the gross salary. First entry for the recording of gross salary. The second entry to record deductions from the salary. To record the deductions from the salary. Third entry, net salary payable or paid. The fourth entry, EPF contribution by the employer. Fifth one, ETF contribution. The gross salary, deductions, net salary, EPF company contribution and ETF. Usually companies are maintaining salaries and wages control account to complete the double entries. This company also same. The first entry, recording of gross salary. You can draw the general journal and record it. First entry to record the gross salary. Recording of gross salary. Right. What are the accounts involved? Gross salary, the salaries and wages account debit, salaries and wages account debit. They maintain salaries and wages control account credit. Salaries and wages control account credit. How much? You record the gross salary. The gross salary how much? The gross salary how much? 45,000 rupees. 45,000 rupees. 45,000 rupees. The first entry, you debit salaries and wages account debit, salaries and wages control account credit. First entry. And the second entry, deductions. Second entry, deductions. So whatever the number of deductions you have, you pass only one entry. You pass only one entry. Second entry, deduction from the gross salary. Deductions. Now salaries and wages control account you credit. Now we debit deductions. Salaries and wages control debit. We have to credit. We have to credit relevant deductions account. How many deductions account here we have? They have loan account, festival advance account and EPF payable account. How many deductions account? They have loan installment account, festival advance account and EPF payable account. The loan installment, festival advance, EPF payable. You credit them. Loan account, credit. How much? Loan amount 4,000 rupees. 4,000. Then the other deduction, festival advance. Festival advance account credit. Festival advance account credit. How much? Festival advance account credit. You have 1,000 rupees. 1,000 rupees. Then there is another deduction which is EPF. EPF payable credit. EPF payable credit. How much is EPF payable? 4,000 rupees. 4,000 rupees. Then the addition control account debit 9,000 rupees. Control account debit 9,000 rupees. First entry, second entry. Then the third entry. Third entry, you record net salary payable or paid. Net salary payable or paid. Net salary. Net salary payable or paid. So that's a double entry. Net salary you have 36,000. The salaries and wages control account debit. Salaries and wages control account debit. How much? This amount 36,000. 36,000. We have to credit. The credit entry depend on. The credit entry depend on whether you paid or payable. If you have paid, you can credit cash account, cash control account credit, or salaries payable account credit. The question will say clearly whether you paid or salary control account, salaries and wages control account debit, or salaries and wages control account debit, salaries and wages control account debit, cash control or salaries payable account credit. Then to this memorandum account, this for your knowledge, if you draw the control account and see the 45,000 you credited, 45. Then this 9,000 you debited. This for your knowledge, 9,000 debited, and the 36,000. This 36,000. You debited. So ultimately, this account got salary control account total comes. And the fourth entry, you have EPF contribution by the employee. EPF contribution by the employee. Fourth entry. The fourth entry, EPF contribution. What are the double entries? EPF contribution, EPF employees provident fund expense debit, and EPF payable credit. Put the EPF payable credit. How much? 6,000 rupees. EPF expense debit, EPF payable credit. Then the last entry, ETF contribution. ETF contribution. How much is the ETF contribution? ETF 1,200. So double entry, ETF contribution, double entry, ETF expense debit, ETF expense debit, ETF payable credit. So how much is the amount? How much is the amount? 1,200 rupees. ₹200. Those are the entries. First entry goes salary, second entry deductions, third entry net salary payment or payable, and EPF contributions, last entries. Right. And so today we discuss 14th lesson, mainly 14th lesson we have mainly 4 areas: introduction to costing, cost and management accounting, material costing and labor costing. In this lesson there is another part, overhead costing. In this lesson you have another part, overhead costing. Right. In the next lesson, next discussion, we will do overhead costing calculation. Right. Under this series of seminars under the concept of NanaJaya, organized by the Bank of Ceylon. Right. I must thank to Bank of Ceylon for inviting me to share my knowledge and I learn by doing professional courses, my university education and A-level is to share my knowledge. I think you also get certain knowledge about the lesson. The best thing is, if you possible, share your knowledge with your friends. Right? You are our future. Right? If you properly study, if you properly learn only, we have a good tomorrow. So whatever your target, try to continue with your studies. Possible, help your people, and to your attitudes, always try to have good attitudes, as well as you try your maximum level to help people. Why? If you are helping each other, then we can have a beautiful tomorrow. So thank you very much for watching this video. Until we meet with another topic, I'll stop here. Thank you very much and bye.